Welcome back. Now, in exactly 3 months, Americans will hit the polls. No matter which way the vote goes, the country's geopolitical landscape will impact global markets. This as policies for Democrats and Republicans are as divergent as the candidates up for election. Simon Fillmore, who's Chief Investment Officer of Independent Securities, joins us now to discuss the different policies driven by the parties and to help us better understand the investment risk associated with this election. Simon, thank you for your time and a good afternoon to you.
Good afternoon.
We knew that this year would be an interesting one based on the number of elections that we were going to see. But Simon, this is the big one, isn't it? This is the one that's going to really drive a lot of behavior in the markets.
Yes, absolutely. You're 100% correct there. It is the big one, specifically considering that the US is the largest economy. And then again, we've also got one of the candidates being the former president, who can be quite disruptive and unpredictable in his policies at certain times, and that could have a significant impact, specifically on geopolitical events, which in turn might have an impact on markets. So certainly in terms of the elections, it is the biggest one with potentially a wide range of outcomes.
So we know, of course, for now, the Republicans have fielded Donald Trump as their guy. Let's just talk about some of the policies that might, be driven by the Republicans specifically.
Yeah, so Trump, in terms of his stated policies, is a pro-growth candidate. So what we're likely to see from him is an extension of the tax cuts that he first brought in 8 years ago. And he's also talked about dropping those corporate tax cuts even further. Then there's a big focus on deregulation from him. We've seen the Democrats with Lena Khan have been quite forceful with regulation, stopping corporate activity, M&A, and I think it's the Republicans' policy to be more lenient in terms of regulation and allow business to flow more freely. And then I think the biggest one will be geopolitically speaking, and specifically in terms of defense spending, where the Republicans want to pull back the amount of spending that they do each year, and in certain cases looking to get their partners vis-a-vis the Taiwan, Europe, to spend more on their defense spending, and for the US not to foot as much of the bill. And then lastly, probably the tariffs will be another area that are going to be impacted quite significantly. So I think from a geopolitical point of view, the risk is high. The trade tariffs, whether that results in a tit for tat where we see just nations lumping tariffs on each other could also be quite significant for markets, because what it will do then is, although we'll see productivity go up in the US because more goods will be produced in the US, it will introduce an element of inflation. And I think the world has fought hard to get inflation down from 9% down to 3%, and we could see that go higher if there are too many tariffs levied.
And then on the other side of the coin, of course, we have the Democrats. Simon, take us through some of the policies that they might field.
Yes, I think they've been a lot more transparent in terms of what their policies will be. They'll be a lot more consistent. There will be pushes for some cut tax, but that'll be on people who earn less money. There will be renewed emphasis on social spending, education, bringing down the cost of drugs, medicine in the US, which are particularly high. And I think we'll see from Kamala Harris that it'll largely be an extension of what Biden has done over the last couple of years. She's been a loyal Democrat foot soldier, and we're not likely to see anything too unorthodox from her.
Also interesting here, I guess, is that no matter who comes in here to take over presidency, is the state of the U.S. finances here, the state of the fiscus. This has been something that we've been watching quite closely over the last few years here, Simon. Let's talk about that as an additional risk, and maybe if it's possible that the Democrats and the Republicans may treat the fiscal issue there differently.
That's quite right. So at the moment, they're sitting with about $34 trillion in net debt, and it increased equally actually between Trump's term and Biden's term. Obviously, COVID had some impact on that, but well over 120%, 100% of GDP now, it is a significant number, and I guess at some stage, it needs to be addressed. One of the key events for investors over the next couple of years is that around 40% of that debt is maturing, and it'll have to be refinanced at significantly higher rates than it was originally funded at. And obviously, the only way to reduce that debt is to increase taxes or decrease spending, both of which aren't popular outcomes. So it'll be interesting to see which way both parties go with that.
And then, of course, there's maybe the rest of us, Simon, trying to take stock of, that environment. It is volatile. It is supercharged. And we, of course, have investment decisions that we need to make. What are some of the considerations that we should be making as we try to take stock of that environment?
Yeah, so I think probably the most important thing at this stage is that we're not going to know who the winner is until November. I think it's quite close. We've seen that Harris has had a renewed bout of enthusiasm for her as a candidate, and in fact, over the weekend, in some of the polls, she now exceeds Trump in terms of popularity and probability of winning the election. So I think as an investor, you want to ignore a lot of most of the noise actually, and then just focus on the basic fundamentals that investors do, and that's concerning yourself about the quality of the business, balance sheet, returns on capital, and ensuring that businesses have some sort of growth profile in front of them, and focusing on those aspects rather than the political aspects.
One that just worries me as a South African, in my little emerging market share, currency risk. And I'm very keen just to get your thoughts on that one. Like you said, the world has worked very hard to get our inflation through. We have here at home. And how does currency look, especially for emerging markets, Simon?
Yeah, I think currency is always very difficult, and no one really knows. And obviously, the long-term trend for the rand is to weaken by virtue of its inflation differential with its major trading partners. But I think quite a strong case can be made in the short term. There is a possibility that the rand can move and strengthen from very oversold levels that we see at the moment. But longer term, we would expect the weakening trend to continue.
Well, Simon, thank you for these insights. It's been very interesting chatting to you today. Thank you so much. That was Simon Fillmore, Chief Investment Officer of Independent Securities.